What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Snapchat's Q2 2017 earnings report. The stock has been getting hammered. It hit all-time lows, trading at about $12.50 per share now, almost the lowest it's traded since its IPO on the back of this disappointing earnings report. Let's dive into it, see what really happened. Most important for Snap's business is daily active users. How many people are checking the app every day on average during the quarter? In Q2, it was 173 million daily active users. This was up about 21% year over year and about 4% quarter over quarter. Snapchat's user growth rate has decelerated notably in the last couple of quarters, but this is 173 million, still a record number of users. And remember, this comes in the wake of Instagram trying to copy every single one of their features, directly compete with Snap, take out engagement from the app. In the midst of this, Snapchat is still growing with record users, although it's still a little bit slower than Wall Street would expect. Now let's dive into the financials. Revenue came in at about 182 million in the quarter, up 153%. Gross profit turned positive, which was very impressive. Went from negative 23 million to 30 million. That's negative 32% margins to 16% margins. This business model is super new. They only started monetizing with ads 2 years ago, and we're already seeing them sell those ads at a profit. Although remember, that 16% gross margin level is still pretty pitiful compared to other social media companies, Twitter, Facebook, Google. You know, they're all well above 50% software company gross margins. Snap is still nowhere near that level, but getting there quickly, improving quickly. So I would like to see their gross margin continue to improve. Then if we bring in operating loss into the graph here, this is looking kind of ugly. So as you can see, although Snapchat's revenue is growing, their loss nearly quadrupled from negative 116 million to negative 449 million. The company's hiring like crazy since the IPO. They're making all these acquisitions. They're investing in their future heavily. I mean, what this is telling you is Snap is still a startup here. There's no other way to do it. They're nowhere near making money. They have a cash balance of about 2.8 billion at the end of the quarter, which is enough to last them for another year or two, depending on how their burn rate trends. Facebook was making a bunch of money at $1 billion revenue run rate. Snap is nowhere near that levels, and that is because their cost structure with video is simply much higher. Now, one thing I quickly want to make a note of, cost of revenue. This is really what's hurting Snap's profitability. It is so expensive for them to host their platform because of all the processing power it takes. And their hosting cost per daily active user is actually going up. Not sure if this is because they're running more complex tasks on the app or spending more time in the app. The hosting cost per daily active user was 61 cents in Q2, up from 55 cents, about 10%. And remember, this is adjusted per daily active user. And if we look at quarterly average revenue per user, like the global average revenue per user was only $1.05 in Q2, and 61 of that immediately goes away just for hosting the content. About 60% of Snap's revenue immediately gets evaporated just because of the hosting cost of that user. So this is a really tricky business model. We're still very early in seeing how it matures, but it's interesting to note there are still significant questions surrounding Snap's structural profitability. Other notes on the quarter, 25% of smartphone users in the US, France, UK are using Snapchat every day. The dancing hot dog, this phenomena that was in the app that was just jumping up and down, got viewed over 1 billion times already. Like, just an absurd phenomena, kind of weird, but this kind of viral stuff is, I think, Snap's edge. On top of that, they launched a feature called Snap Maps in the quarter where you pinch out and immediately you're brought into like this map, which Spiegel on the conference call brilliantly describes as not a map you pull up where you don't know where you're going, but a map you pull up when you look for where you want to go. So it's not like, oh, I'm lost. Where do I need to go? Let me look at the map. It's like, oh, I'm bored. Who's around me doing cool stuff? Let me open up Snap Maps. I think this is awesome. Really cool feature. In a nutshell, this kind of reinforces the point that Snap is the innovator here. Even though they're losing money and their user base is much smaller than Facebook's or Instagram's, they are the innovator. Facebook and Instagram are copying them. Snapchat is at the vanguard of every new big social feature. I think Spiegel really is the visionary. Taking a step back, like I've been asking a lot of my friends, you know, are you on Snap? Are you using Instagram? Everybody that's my age or younger, I'm 24, like the engagement, the loyalty to Snapchat is very, very strong. I've been impressed with especially people younger than me saying that they're still using Snap, they're still committed to the platform, it's a lot more fun for them. So I think Snap really has staying power among the younger demographic. I think as more babies get born and they go into the Snapchat universe instead of the Instagram universe, Snap is going to become more and more relevant. relevant. Instagram's the millennial platform. Snap is the Gen Z platform. That's what we're seeing play out. I'm getting more bullish on Snap just on some of this anecdotal evidence. For what it's worth, I'm back on Snapchat. I want to do some DD for this episode, and I noticed it was interesting that I have way more of my friends posting Snapchat stories than I do have Instagram stories, even though I have way less people that I'm following on Snap. So the engagement with Snap stories still much higher than Instagram stories, at least for people that I'm following. They're working on a bunch more original content. One of their shows they noted gets over 10 million viewers per episode. It's getting picked up by television. The voice on Snap was nominated for an Emmy Award, so impressive advancements in the functionality of the app, impressive advancements in the content strategy. Moving to device sales, those apparently were disappointing, came in at about 5.4 million for the quarter. Given they were about 8 million in Q4, everyone thinks this is a disappointment, but they just launched in Q4. This is a totally new product. It's a wearable glasses. I think this is a huge success, and I think what's very interesting is if you look at this chart of Snap's revenue breakdown, they had no hardware revenue in the first half of last year. This year they already have 14 million, not a lot, but still a noticeable amount. And this is going to be a business that's just going to keep getting bigger and bigger and better for Snap. I think they're going to release another pair of spectacles, version 2. They just put the spectacles on Amazon. There's rumors they're buying a drone maker. I think that's going to turn into another future product. I'm about to put out another episode on Snap's hardware ambitions as a whole, so stay tuned for that. On a broader level, I think it's, YouTube, Facebook, Instagram, Twitter, none of these companies are launching hardware products. Like Snap is not just a platform where you consume content, it's also a company that's making devices that allow new ways to capture content. A lot of people on Wall Street are writing these guys off too early. It's still super early in the business model. Sure, their financials look awful, their growth is underwhelming, but they seem to be fending off Instagram. They're still the leader in innovation. They have this very intriguing kind of like software consumption with hardware content creation dual business model that nobody else has, that I think we're in the very, very early stages of seeing evolve and mature. Like, I'm personally a lot more bullish on Snap than I was a couple quarters ago. The shares here at $12.50 are dramatically cheaper than they've ever been. I think this is starting to get a lot more attractive and a lot more reasonably priced. Now let's dive into the financials really quick. If we assume there's about 1.5 billion total shares outstanding for Snap, at its current price, about $12.50 per share, that's a $19 billion market cap. That's still kind of expensive given the consensus is for only about 960 million in sales this year, 20 times current price sales ratio. And part of the reason the stock has been getting hit so hard is because, these growth expectations have been coming in. It used to be $1 billion in revenue. That was the 2017 consensus, $2 billion for 2018. Now that's dropped to 960 million for 2017, 1.8 billion for 2018. Wall Street's having to rein in their estimates a little. This is why the company is getting hit, but I don't think it's the end of the world. A 20 times price sales multiple is still incredibly expensive. There's a lot of growth priced in here. It's an exciting company. They have a lot going for them, but competition is huge. They're going to need to execute and grow to really grow into this valuation, but 20 times revenue is a lot better than 40 times revenue, which is what they were trading at. So Snap continues to get cheaper as its share price falls. Anyway, that's my wrap up on Snap's quarter. If you guys have any ideas, comments, questions, let me know. I'm about to put out an episode about their future of their hardware ambitions, an underappreciated, awesomely fascinating piece of Snap's business model. So stay tuned for that. That's Hyperchange. See you guys next time. Snap's earnings review. Financials weak, innovation strong. Peace.